watching our video on how to identify foreclosures, bank-owned homes, some real estate opportunities that are out there in the market. My associate here, Scott, and I are going to go over some of the particulars that many folks may have as far as some of the frequently asked questions, steps that are needed in which you can identify these situations that are, again, short sales, foreclosures, rehab properties, basically some of the opportunities that are out there in the market.
So there's a lot of properties out there, and I think there's a lot of misconceptions about maybe what people think they have to do to get this type of loan, what they have to do to get into that type of property. So again, this is an informative video, one of many in our series, and hope to break down the myths and give you some straight truth on what it's all about.
Yeah, exactly. You want to just grab a couple of questions that we've heard from time to time and go from there?
Yeah. So basically, I guess one of the biggest things we talk about maybe is what type of homes do qualify for this program. Maybe you can kind of allude to a little bit about that.
Sure. Yeah, basically it really, and even take a step back, it depends on it's almost like the property will determine what kind of program you're going to go into. So, and then regarding the property, it's going to depend on how much work is needed to be completed on the home before you take that next step. So, really in the grand scheme of things, there's homes that are bank-owned, homes that are not bank-owned, homes that need work, homes that don't need work. Specifically as far as some of the programs, and then the properties that will be eligible for it are going to fall into, let's say it's bank-owned. Is it owned by a local bank? Is it owned by Fannie Mae, Freddie Mac, some of the larger institutions? And the reason being is some of those programs, for example, HomePath is a program that Fannie Mae puts out whereby someone can buy a homeowner. It could actually be a homeowner to live in the home or an investor. Second home as well. So technically, if you're looking to buy a vacation home, primary home, owner-occupied, or investment property, this particular program, HomePath, lets you find homes that are owned by Fannie Mae. HomePath.com, you can find a list of all of them. But basically, you're able to buy a home with very little down payment. A couple of the key things: you don't need an appraisal.
Which in today's market is huge, because we all know there's a wide variation of opinions on what home values are at, neighborhoods, where are those at, and then even towns within the actual state itself. There's such different trends for all the different types of homes out there, so it's a nice benefit.
It's so, and you think even just over the years past, I can count on one hand how many times I have an appraisal that wouldn't come into value, and then of late, it's really not uncommon at all to have even purchases just not come into value. So that's a key point there. So as far as cleanliness, you don't need an appraisal on a home path. Also, don't have mortgage insurance, which is huge, especially if you're an investor. Investors typically can't buy homes unless there's 20% down, if not a little more, 25% on most of those. But so HomePath is for homes that are owned by banks. So that program itself are owned by Fannie Mae, and then Freddie Mac, which is the other large secondary market institution out there. They have their own site called HomeSteps.com. So HomeSteps for Freddie Mac, HomePath for Fannie Mae. So HomePath, that particular program, low down payment, no mortgage insurance, no appraisal, very clean, very fast kind of program. They also have, within that program, they have a renovation program and a non-renovation program, depending on the condition of the house.
Which is a whole other video that we do have.
Completely. Yeah, you can get into some of the real details on the renovation loans when you get into that.
And that's the funny thing about the lending world. I mean, you're talking about how these all interweave together. Right. That's sort of where, someone like one of us comes into play, able to use one or possibly multiple programs to get you the home that you're looking for. So again, it is kind of a muddy water at times. We obviously aim to clear it up a little bit, so hang in there.
Well, it's so true, and it's so true. We were talking about this the other day that a lot of people think, for example, the HomePath renovation loan, we're one of a few lenders who actually have the ability to offer that. Many lenders, I'd probably be safe to say probably 90% of the lenders don't have access to that, even a little more than that. So it doesn't mean it's not there, it just means that people don't have access to it. Another kind of program, if the property is in rough shape, and again, we do have a full video on this, is our 2 or 3K loan programs, depending on the amount of work that's needed. Renovation.
Also known as a rehabilitation loan.
Exactly.
Taking possibly even a bare bones type house, building it back up, using the future value of what the home will be to go ahead and get that loan.
Completely. Because on that note, if the home does need any work, typically conventional financing won't work. And the reason being is because you're going to have, again, this, not to get into the nuances of how the lending business works, but the secondary market typically won't take for collateral a property that has a good degree of work that's needed outside of paint and paper and those sort of things. But really FHA, with the 2 or 3K programs, and even FHA, if the home doesn't need work, FHA is still a great program to buy as well. HomePath is great for that as well. Regular conventional, depending on the amount of work that's needed as well. But how about just with regard to the properties themselves? Another question that you asked, what's eligible? Really,
and the reason why I ask it is because I think people have this image in their head about a bank-owned property. We all see things on the news that say, there's weeds growing out front. Somebody broke in and stole the copper plumbing.
Exactly.
There's a lot of maybe myths or misconceptions, so I'm hoping maybe we can clear it up as to what actually is out there. And
that is such a good point, because the copper thing, especially in this situation that we are right now economically, that's not uncommon.
Yeah.
I will tell you off the cuff, if someone stole the copper from the house you're interested in, it's going to need a rehab loan.
Right.
But that being said, really the type of home that's eligible, single-family homes, multi-family homes, one-family, two-family, three-family, four-family, up to four-family. Condos really the only thing you really have to be careful of. There's a degree of, with a condo, there's an extra degree of risk that you don't have on a single-family home. For example, normal single-family home, to a good degree, your next-door neighbor it'll affect your value in theory if it's an identical house to yours and they sell at a fire sale price. But with a condo, you also have financial connections where we're all throwing money into. Totally. So collectively, you're all throwing money into a pot for renovations and upkeep and such in the condo complex. And if there's a good degree of defaults or delinquencies and such, and now only two-thirds or three-quarters of the condo complex is throwing money into this kitty, well, then financially they're unstable. So there is a degree of that. But outside of that, again, you have a great degree of flexibility. Even some of the manufactured homes as well, double-wide homes, those sort of things have some freedom as well. Generally have to be on their own land. If they're in a park, it's not eligible because of the issue with the park itself. But more importantly, you have a good degree of freedom. We talked at one point, and I kind of already hit on it, about how to find homes. So internet-wise, MLS and such, they're out there. HUD homes, they're out there. It really depends on what it is you're ultimately looking for, and more importantly, what I would suggest above and beyond everything is make sure you have a solid team around you that can help you and direct you in these ways as well. But again, homepath.com, homesteps.com, so homesteps, S-T-E-P-S, and then a homepath, P-A-T-H.com. The normal MLS is great. Getting a good realtor and a good agent who can do these sort of searches where they can do searches for TLC or rehab or needs work or contractor special, handyman special, those sort of phrase searches are a good way to uncover those as well. Plus, you brought up the whole fact of weeds outside of a property. Yeah. So if you find a property in your neighborhood has a whole slew of weeds going on, not being upkept, another common thing that you see is the windows are open and you can see into the house. There are newspapers that are stacked up near the mailbox, or there's just mail stacked up to the mailbox, or yellow pages, books, those sort of things. It's a good way to identify opportunities and then give you possibly a leg up on your competition, I guess, more than anything.
Let's speak a little to the big picture. Why would somebody want to buy a bank-owned property? Is it necessarily the value? I mean, how much of a bargain are we talking about on some of these?
It could be a couple things. More importantly, that is what a lot of people think of. They're like, okay, especially if the home needs work. If the home doesn't need work, depending on the bank that owns it, some of them are great deals, but some of them really aren't. Some of them are priced out because the bank wants to get as much money as they can back too. But I can tell you, I've seen some phenomenal opportunities that are out there. Most of them come down to either buying towards the end of the year when the bank wants to get it off the books, because mathematically and financially, a bank, when they have a home that's on their books, meaning in their inventory, that actually hog ties a good degree of money that they can then lend. They have to have a greater degree of reserves for every property that they keep. And you run into that calculation at the end of the year. You run into it at the end of quarters. So you have opportunities right there where people want to get it off the books within a certain period of time. And I'll talk a second about time frame because that is such a key point. But I'll tell you, most of the deals that I've seen that are really impressive and head scratchers to a degree are the ones where they need work. Because again, banks, let alone, are not in the business of holding property. They're even less so in the business of holding and renovating property. They just want them off their books. Time frame and such, what type of loans, what type of properties are out there. If somebody already owns a home, it's typically a bank. If a bank already owns a home, it's typically called a bank owned or an REO, which stands for real estate owned. If the bank doesn't own the home yet, and you see this commonly short sales. With a short sale, what that means is that the individual still owns the house, but they recognize that the home is not worth what it is that they owe, and more importantly, they can't sell it for what they owe. So
very common problem.
Oh my gosh, with this market, it's so true. I mean, you can just think of buying a home years back at $200,000, and now you're competing with, let's say, the Home Path. You're competing with all the other bank owns. So now your home is selling for $150,000. Well, really, the bank realizes there's two options. Either if you're having a problem making the payment, you can't sell it for $200,000. You can try all you'd like. You're not going to sell it typically for $200,000. So what they'll do is they're recognizing that they're going to take less. So what generally happens is the home goes on the market, it says it's a short sale property, somebody comes in, places an offer on the home, what offer they put in, let's say 140, 150, what have you, that then goes back to that bank that holds that mortgage. They don't own the house yet, because again, the homeowner or home seller is still involved. Yep, still. But then they have to go and approve that short sale. It's called a short sale package. They have to approve that whole package to make certain that they're okay taking less.
Right.
Now, we talked about this the other day, that it can happen. It can happen in 30 days. I've seen them happen in 7 months. And the problem that you have there is this process alone can be trying at times.
Sure.
So let alone it takes that long. It's something you really want to be careful of.
Yeah.
A lot of folks.
There's no clear-cut answer.
No, there really isn't.
Every situation is unique, and like you said,
It is so true.
buying a home is probably one of the biggest investments you'll probably have.
Right.
When you add extra stress on top of that.
Right.
That's kind of the situation that we deal with as lenders.
Mm-hmm.
And again, that's kind of why we make these videos, to make some sort of sense of some of the madness, see if there's something
Sure.
that we can do to provide you some sort of tips or techniques
Clarity.
to maybe cut through some of it, some clarity.
Yeah.
But yeah, it can be a short process, it can be a long process.
Sure.
And I think maybe one of the hardest parts that I can speak from, at least from being a lender when working with my home buyers, is that we're not always sure maybe where the process might be.
Right.
As far as what the banks are willing to accept and what they're not. And I don't say that from a standpoint of we don't understand what's going on and driving the potential deal. It's just that sometimes it's out there, like you said, the bank owns a property and they're humming and hawing, so to speak, or maybe what that offer is, will they take it or won't they?
Because they're acknowledging a loss is what they're doing.
Right.
So they know they owe 2, and now you have an offer where someone's willing to offer 145, and it's been on the market for, you could even say a year or so. I mean, it could be on for a long period of time. So basically now what they have to do, and again, it comes into the dates as well, when do they want to realize that loss? But now they're acknowledging that, yes, I'm going to take $50,000, $60,000 loss on what it is that we're owed, and are we okay with that? Because then they'll also look at the home buyer. Is it a solid home buyer? What's the scoop that way as well? So the new home buyer, even though they're basically going to get a new loan and just take them out, but do they want to take the home off the market? Are they okay with the dollar figure? Do they think they can get a little bit more? That's another thing that they'll do too. You can't just go in and it's selling for 150, they owe 2, and go in with an offer for 100 because the bank's going to say no.
Right.
We think we can get at least 140 or what have you. Whatever.
And they will hold on to it. We've had numerous instances where a buyer has actually gone in and tried to lowball on something that's been sitting around for too long, and they don't get anywhere. Much to the surprise of everybody involved, realtor, lender, all the experts, so to speak. Well, and it's frustrating because we know that this property has been sitting out there for so long, and there's a lot of other inventory that's been sitting out there.
Right.
Maybe
now the market may have gone down in the meantime too, so they may think it was worth 150, and it was a year ago, but now it's worth 135, or vice versa.
I think in all these videos that we do, I mean, we always try to spin it with some sort of degree of optimism that that there is some clarity and understanding for everybody involved. But these ones are a little unique. They're a little bit different in the fact that sometimes we don't always get what we want. Right. We being, I guess, a potential buyer for this home, because the banks are sometimes too willing to hold off and take a desired price.
Oh, completely.
So it's kind of tricky. Not to dissuade anybody, but it is. It's an interesting kind of phenomenon, I guess, in today's world.
The good news is once you do get to the other side of that street, you're again. Think of this as you will, taking advantage of opportunities or what have you. But you're buying that home for 140 that was worth 200. Not to say it's going to be worth 200 next year, but just to say it's a better buying it at 130 than it is buying it too. Yeah. And then again, it just comes down to having a good team around you, again, lending, but also in the real estate side, the realtor side, setting proper expectations. And it's not that short sales by themselves are evil. It's just the fact that if you think it's going to only take a 1 month process and it becomes 6, that's not very good. If you think it's going to take 6 and it's done in 2, complete different expectation.
Patience is stressed during these type of purchases for sure, because it is kind of a fluid process rather than a set in stone kind of process. So.
And we do a great deal of these on a monthly, let alone daily or weekly basis. So that is a key part right there as well, is making sure that because again, it just comes down to those expectations that are being set for you. But they're great. They're a great thing to go after. A great way to get some instant equity, or at least short-term equity. Some of the numbers that we've had have been pretty significant as far as what's
staggering when you look at some of the savings that you have. Some of these homes are potential dream homes. Sure. A, for the person who had to let go of the home, and B, for the person who wants to buy it. So you're putting a lot more than, say, dollar amounts into this. You're putting actual emotion and feeling into this purchase of a home that you saw, you wanted. It's worth the actual effort to go ahead and do it, and that's obviously why we're making the videos. So.
And we've talked about this multiple times, but this is literally probably one of the best times literally in decades where you have market conditions where the rates are at all-time lows. You have programs, mind you, the programs have been tweaked over the years, but the programs for a particular buyer who's looking to buy a home that either needs rehab or a motivated seller kind of home like this, phenomenal.
Yeah.
The prices are ridiculously low.
Yeah.
And again, when you mash all those things together, someone can walk into buying a home today, and in 5 years, their wealth compared to those who are still renting can be a significant difference. Mm-hmm. So it's definitely very attractive. So.
Absolutely.
But that's basically the scoop as far as what you want to look at when you're looking at foreclosure homes and short sales and the differences and what's important. You can again see, first of all, contact us with any questions you have if you want to get pre-approved. Our contact information is after this, after the video, but you'll also see from some of the other videos that we have, again, some of the particulars that are needed, some of the steps that are required, what it takes. Because again, it just really comes down to making sure you have that proper expectation set in the front, and then to make the process itself as streamlined or seamless as possible. So, anything else you think we should add?
No, I think it's a great program. It's a great time to look into purchasing homes, especially homes that are owned by banks. You can really get some good bargains out there. Just a matter of having your ducks in a row, so to speak, and you can really find a nice home at a good price.
Yeah,
So
walk into some fantastic equity. So
let's do it.
All right, thanks very much for coming by.